The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. Hey guys, this is a midweek analysis for April 27th of 2022. Okay, let's start off with the Euro-USD pair. Okay, this is a daily chart. Let me run you by the recent setup I was looking at. So at this point right here, there was a strong short trade that formed. Then about a month and a half ago at this point right here, there was a weak long trade that formed. And so strictly going from this daily strength, the daily bias will be short. Or in other words, price is likely to reach this pivot low before reaching this pivot high. However, recall on the weekly forecast I was mentioning, there were signs of lower confirmation long strength. And when it comes to higher time frame biases, the lower time frame confirmation has the ultimate say. And so I was mentioning, if I get a pullback, I will be willing to take a long entry, assuming that this daily bias is actually long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. However, over the weekend, there was a new daily short trade that formed right here. And so on the Communities tab, I posted that this daily bias is back to neutral at this point, since there was a new short trade that formed, which outdates the lower time frame long confirmation that formed right here. And so the new parameters for this daily bias was now at this pivot high and this pivot low, and no longer at this pivot, for there was a new short trade that formed. And then moreover, on the Communities tab, I was mentioning if I get a new lower time frame confirmation in either direction, I will be taking an entry in the direction that that lower time frame confirmation forms. And so roughly at these 1.0800 levels right here, there was 5-minute strong lower confirmation of short strength, confirming that this daily bias was in fact short. And thus I took a short entry at this 1.800 levels right here, with a stop loss right above at this level and its main target right here. So first of all, let me go ahead and show you that lower time frame confirmation of 5-minute strong short strength. So let's go over to the 5-minute chart. Okay, so on this 5-minute chart, that new daily short trade formed on the open on Monday on April 25th. Then immediately, there was strong lower confirmation of strong short strength from this trend line, from this pivot to this pivot right here. You see there was a breakout, an immediate break back in, which signals normal long strength. However, price was able to come right back down to the pivot low where that long strength was created, thus creating strong short strength, and moreover confirming that daily bias to be short. And so I took that short entry roughly at the 1.0800 levels around here, with a stop loss at this pivot high and its main target way below, like I showed you on the daily chart. Now as you can see, this short entry was a mid-road short entry, for my stop loss was at this pivot high right here, where the strong short strength was created, and not at the daily short trades pivot high. Now let me go ahead and explain why. So let me zoom out here. Okay, so again, I took that short entry at the 1.0800 levels, roughly around here, with the stop loss at this pivot high. Now, like I always mention, these mid-road short entries can place the stop loss at the pivot high where that lower confirmation was created, and not at the price level of the daily bias, which is up here at these levels. Now, the reason why I put the stop loss at this pivot high right here is because, like I was mentioning, the weekly chart has strong short strength that was just recently confirmed through the fake HNS that reached its target height level. So in a case like this, when the even higher time frames are showing strong short strength also, the stop loss does not have to be placed at the daily bias's pivot high and can be placed as a mid-road stop loss level right here. Now that said, there are times that even if there is not higher time frame strength in the same direction of the lower time frame confirmation, price does not come back to that mid-row stop loss level right here. However, that is a case-by-case situation, and it's much more likely that if the higher time frame strength is in the same direction of that mid-road entry, price will not pull back to this stop loss level right here. Now let me explain why it's important to know when to put the stop loss at the mid-road stop loss and not the higher time frames biases stop loss level right here. Now as you can see, my entry level was right here at 1,800, while this stop loss right here was at 1.0815. So this stop loss distance is about 15 pips. However, if I were to place my stop loss at these levels up here on the daily bias, that would be about a 140 pip stop loss. And since, as a general rule, I only risk 2% on each given trade, by putting the stop loss level at this pivot right here, I'm able to actually increase my loss sizes by 9 times while still maintaining this 2% risk. Okay, so just remember, in any given bias setup, there's multiple ways to enter that trade, and it's really dependent on what's happening on the higher time frame strength, which in this case, the weekly chart had strong short strength, and thus I was able to take this short entry with the stop loss at the mid-road short entries stop loss level right here. Okay, and moreover, let me just talk about how I took out the targets on this trade. So let's go over to the 1 minute chart. Okay, so on this 1 minute chart, I took that short entry at 1.0800 levels, roughly around here, with the stop loss at this pivot high, and that daily bias's main target was at 1.0757, roughly around here. However, I did not close this short position at that daily bias's main target right here. Now again, this is another situation in which, depending on the higher time frame strength, targets can be extended slightly. Now let me show you how I extended this target on this short entry. So let's just zoom in. Okay, so initially that main target for the daily bias was at 0757, roughly around here. However, I closed that position at the 1.0734 levels around here. Now when the higher time frame strength is in the direction of your entry, in order to extend the target slightly, first of all, you want to watch how each candle closes. So you can see at this point right here, when that main bias's target was hit, we had a minimal wick on the bottom and a full close down. And moreover, although I cannot show you this here, you want price to fluctuate very rapidly, showing extreme volatility. Now those two elements happen again for the next candle right here, with a strong close and a minimal wick on the lower end. And moreover, we had strong fluctuations in price. However, on the following candle, we had an opposing candle close right here. And so at this point, I closed that short position at these 1.0737 levels. So the key thing to remember with these type of extension targets is that, first of all, the higher time frame strength is in the direction of your trade, and we get full closes in the direction of your trade on the 1 minute chart with minimal wicks on the bottom in this case. And moreover, we get rapid fluctuations showing extreme volatility. Now in this case, I aborted that short entry at these levels on this first opposing candle close. However, just recall, there are times that price wicks all the way back up to these levels right here, where my original daily bias's target is at this level. And when that happens, you do need the discipline to take out the entire position at this level and not hope for a further pullback down. Okay, and that discipline is mandatory. Okay, so let me just wrap this up on the weekly chart. Okay, so on this weekly chart, the last short trade that formed was right here. And so at the current moment, I'll be waiting for a new long trade to form and compare the strength differential between this long trade and the last short trade that formed right here to come up with a weekly bias, whether long or short. And moreover, I'll be looking for these biases on the daily chart also, like that last setup I showed you. And just remember, there is strong short strength on this weekly chart. from this fake HNS that I formed right here that actually went its target height level just recently before reaching the stop loss level right here. Okay, and I'll keep you guys updated for future trades. Okay, so that's it for the midweek analysis. I just want to speak on a recent comment that I received from a viewer. And now it reads, what I struggle with at times is the fact that my analysis will result in a 50-50 prediction of price direction, and I end up facing analysis paralysis. And so I end up gambling the decision to trade anyway, as if I didn't analyze the price in the first place, or look for other price action traders who I agree with to validate my trade. Now I hope the author of this comment doesn't mind me sharing this message with other viewers, but I think sharing trading issues here will tremendously help other traders that have similar trading issues. Now there's two things I want to say. Now number one is that if your analysis of a bias is 50-50, or in other words, if the strength differential between the longs and the shorts is the same, do not take that trade, because considering the many forex pairs there are out there, multiplied by the various time frames, there will always be better bias setups out there that have better strength differentials. For example, 70-30 strength differential. And as a beginner trader, you really want to focus on taking the best setups possible in terms of biases, because in my opinion, I don't think there's a necessity to take losses in order to become a better trader. Okay, number two is that you don't want to use signal services to make trading decisions. And you want to remember that the only way that a trader can make money in the long term is if you trade using your strategy and actually using these losses only to further refine your strategy and become a better trader. Because ultimately, in my opinion, in order to make money in the long term in trading, you have to become a better trader. And moreover, please remember, I post forecasts to validate my abilities as a trader, and it is not meant to be a signal provider. Okay, and if you have time, please share your trading issues in the comments section, because I think it's a great way to learn when we could all just learn together from each other's mistakes. Okay, so I hope you guys have a great rest of the week, and thanks for watching, guys. Okay, bye.